Okay, perfect. Okay, so the meeting's now being recorded. Hopefully you all got that notification. We'll go ahead and get started. Again, my name is Brandon Reed. It's my pleasure to be working with all of you. This AEP, I hope I can help you, make another $10,000, $15,000 this fall, just by adding a product into your presentation that only takes about 5 minutes to present and to actually enroll. So again, I'm with Heartland National. We'll be talking about selling hospital indemnity with Medicare Advantage. And at the same time, I'll just discuss simply how you can actually position a product like this in the under 65 market as well. We'll go over the importance of this product for both us as agents, but also for our clients, why it's so important that we cover this for our clients. We'll go over our plan highlights like our guaranteed issue window, our household discount, and then, last but not least, definitely the claims process, how we get our clients paid, and where this product is available. So we'll start with agent benefits, although we know the main reason we're selling this product is to fill in our clients' gaps and to better protect our clients. It does give us an opportunity while doing so to make a lot of extra money. It also gives us the opportunity while we're working this AEP and running into people who are already on the best plans to fit their needs, to still make a sale, to not have to leave the house empty-handed. That's the worst thing for me when you're spending $500, $1,000 on a mail drop, maybe more, and you get a few prospects to go sit in front of, and they're already on that program that we were going to position in that appointment, right? Maybe they've already got the best Medicare Advantage plan for them. Their drug costs look good, their benefits look good. Well, what don't they have? They don't have a reimbursement plan. So in that situation, right? Gage mentioned he's doing a good job of selling this at 65, but when we're meeting with people who have already been on a plan for 2 or 3 years, it's important to talk to them about these plans too. Chances are they've never been educated on it, hospital indemnity coverage. There's a lot of terminology we can use at this point too to help us open the door for another sale. So Mr. or Mrs. Jones, looks like your agent did a good job for you when they came out to help you with this plan. However, it looks like the only thing you're missing is your reimbursement plan. What do you think they're going to say to that? Nobody ever told me about getting reimbursed. Getting reimbursed for what, right? May I see a copy of your hospital card? That's another way to word it. Depending on the agent, we have a lot of agents doing well with this product, but they're using one of those 2 lines. Mr. or Mrs. Jones, the only thing you're missing is a reimbursement plan, or Mr. or Mrs. Jones, this looks great. May I see a copy of your hospital card? And if they don't have a hospital card, again, they don't know what that is. It's your job to position some hospital coverage in there to fill in the gaps. Oftentimes too, the spouse in the house, whether they're 65 or older or not, they've got insurance too. And since this product can be sold to anybody ages 18 to 85, you can sell hospital indemnity to both people in that household. So if they're over 65 and they've got a good plan, no problem, we'll just sell the hospital indemnity. Maybe they're 65 and they want their benefits reviewed too. Gives you the opportunity to maybe pick up a Medicare Advantage plan and an indemnity policy. But even before 65, when I used to work my seminars, I would find people in there all the time who were just going to stay on their employer group health plan for a couple more years, right? They're going to delay Medicare till maybe they're 67, 68 and stay on their employer group health plan. Well, when it comes to that, guess what? We're not going empty-handed because we can still position hospital indemnity to fill in their gaps. They've probably got deductibles on that under 65 health plan to where if they're in an accident or come down with an illness, they're paying out of pocket until they satisfy that deductible, whether it's hospital or medical. They have to pay 100% of the costs leading up to that deductible amount. So we have ways we can position hospital insurance to anybody, whether they're over or under 65. And by layering policies in the home, right, taking the time to customize your client's coverage, you're also going to create a much stickier book of business. And then Nelson, would you mind just throwing your mic on mute for me? Sorry about that. Thank you, sir. When we get into client benefits, right, it's real easy to confuse Medicare. Our clients are all confused about it. That's where we come in. We need to keep things as simple as possible, right? A, B, C. That's really all it is. So with traditional Medicare, educating them on what that covers and what they're paying for it. Not getting too in the weeds, just a pretty basic understanding. Here's what you're paying for Part A each month, oftentimes zero, as long as they satisfied their 40 working quarters, and then, or their spouse. And then what are you responsible for on the hospital side when it comes to traditional Medicare, right? You don't even have to get into it, but you can if you want. $1,600 the first 60 days in the hospital in the form of a deductible. Co-insurance is over $300 a day, days 61 through 90 in the hospital. Over $700 a day in the hospital, days 91 through 150 during your lifetime reserve days. This is not a suitable option, right? Traditional Medicare. There's a lot of cost sharing when it comes to hospitalizations, but not only in the hospital. On the medical side, you're subject to the first $226 this year, and what after that? Most people know it, a 20% co-insurance for Part B medical services, outpatient services. You don't even have to get into all that. Here's what you pay for Part A. It's not very good coverage, right? You know, I wouldn't be doing you right if I left you on traditional Medicare. Part B, 20% of the costs. And with traditional Medicare, you do have to purchase drug coverage separately. Okay? When we go with, what can we do for our clients? It's option 1 or option 2. Medicare supplement with a standalone drug plan, purchasing all the dental coverage, the vision coverage, the hearing coverage separately, or option 2, Medicare Advantage with a hospital indemnity, right? Option 1, a Medicare supplement policy, is unfortunately becoming unaffordable for a lot of people. We work with a lot of people on fixed incomes, right? Lower income individuals. When we start bringing up a Part B premium that they're paying $164.90 for each month, adding in drug premiums, drug plan premiums and drug costs, and adding in Medicare supplement premiums here in Missouri, an extra $165 a month at 65. And then we start looking at their deductibles and things. Oftentimes we're up to $6,000, $7,000, $8,000 out of pocket just in premiums and drug costs alone. So at 65, you can see a lot of people choosing Medicare Advantage these days, right? It's low to no premium. It's got the drug coverage built in, right? Oftentimes better drug coverage than you'd see on a standalone prescription drug plan, especially when you're using those preferred mail order pharmacies and mail order vendors. It's got the dental built in that you would be paying an additional premium for on the supplement plan. It's got the vision coverage, the hearing benefits. It's got transportation over the counter, a lot of advantages that you don't get with traditional Medicare. But what's the bad part about it, right? Network restrictions, which honestly for me, it's not an issue anymore in most markets because these networks have gotten so much stronger and stronger over the years. I'm not even worried about that. But cost sharing, that's the big one, right? All the holes in this plan when it comes to having to pay out of pocket for services. Now, I'm not worried about these little minute $0 copays to see my PCP, $25 to see a specialist. What I'm focused on, Mr. and Mrs. Jones, is protecting you from some of the bigger cost sharing as it relates to your health plan, like those Part A costs in the hospital, right? Like those Part A costs in skilled nursing. If you need to go to the emergency room, take a trip in the ambulance. If you're diagnosed with cancer on the medical side, Part B, paying 20% out of pocket for chemotherapy. These are the things that I still have the ability to protect my clients from on a Medicare Advantage plan, but for a fraction of what it would cost me to get a Medicare supplement. I'm not covering all the gaps that I would have with a Medicare supplement, but I'm helping bridge the gap between this $0 premium plan and that comprehensive yet quite expensive Medicare supplement plan. I'm getting you as close to that Medicare supplement plan benefits as I can, but for a fraction of the price, while getting you better drug coverage, while getting you better dental coverage built in, which the dental benefits on these plans are getting crazy, right? These days, I'm getting you vision exams each year, money for glasses and contacts, frames and lenses, and over-the-counter transportation, all these extras. But I'm protecting you at the same time. And personally, I feel a lot better leaving the house, knowing that I've protected them from a lot of these things than I would have without. So that was the thing for me, starting out selling Medicare supplement plans. It took me a minute to adjust to selling $0 premium policies with all those holes in it. But hospital indemnity made me a lot more comfortable doing it because I was really putting together something quite comprehensive and actually getting them more benefits than what they're getting over there when it comes to all the added features. There's no reason you shouldn't be talking to talking to your clients about this at 65, right? Like Gage said, it's guaranteed issue, so there's no health questions at all at 65. For a 13-month window, when your age is 64 and a half to 65 and a half, there's no health questions asked. 6 months before your 65th birthday, your 65th birthday, and 6 months after, no health questions asked. In addition, this is an issue age rated product. So what that means is if I sell this policy at 64 and 9 months old, or I buy this policy at 64 and 9 months, I'm paying the 64-year-old rate for the lifetime of my policy. My rate is not going up as I age. So that is huge. Mr. and Mrs. Jones asked, hey, Gage, can I get this later? Is this something we can come back to and I can sign up for later? Maybe in a couple of years? The answer is yes, but honestly, I encourage you to take it out now because, first of all, it's the most affordable it'll ever be for you, right? You buy it at 64, you're going to pay the 64-year-old rate for the lifetime of the policy. When you're 70, 80, 90 years old, you're still paying the 64-year-old rate. And you're probably using this policy a lot more at that time. And then also, I can't promise you that you're going to qualify. When you come back to me in a few years, needing this coverage, right? I can't promise you that you're going to qualify for this coverage. It's just like car insurance. You don't buy it after you've been in the accident. You buy it ahead of time so that it's there for when you need it the most. I'm a strong believer in I would rather have it and not need it than need it and not have it, especially if it's something affordable like $25, $30 a month for a pretty nice little base plan and maybe 1 or 2 riders. Now, we're getting into AEP where we're going to be dealing with plan changes, consumers who have already been on these plans for years. So they've been paying a $0 premium. That's what they're used to. Don't let that get in your head. If nobody's ever educated them on the ability to fill in their gaps, right? They don't even know that it's out there. So you're coming in there, you're positioning yourself as an educator, separating yourself from other agents who have been trying to change this person's plan for years. The first thing I'm doing when I go into an appointment is I'm saying, Mr. and Mrs. Jones, the most important thing we do today is make sure you understand how your current health plan works, right? Whether that's if you need to see your primary care physician tomorrow, or if you need to see your specialist, or have a surgery completed. You have to have a pretty good understanding of what you're going to be subject to out of pocket, right? So Mr. and Mrs. Jones, let's go over that. When was the last time somebody actually went over your health plan with you? Do you know what you pay if you end up in the hospital? Do you know that copay in the hospital, it's not just a one and done copay. That's a copay that you could be subject to several times in the calendar year. And I'll expand on that in just a minute. But it's educating them on their current plan, giving them the options to fill in those gaps, and then, is this the right plan for you for next year? So I'm leading with the hospital indemnity here, whether it's turning 65 or a plan change like we just discussed. Lots of different ways we can bring it up, right? It looks like you're missing a reimbursement plan. May I see a copy of your hospital card? There's different ways of bringing it up when they've already been on a plan for a while. But the main thing is planting the seed, getting back to that summary of benefits, right, Gage? So that you can plant the seed while you're going through it, and then give them the opportunity to eliminate as many of those out-of-pocket exposures as you can for a fraction of what it would cost to get a MedSup, to get a Plan G. So I'm not worried about this down here, this $0 copay to see my PCP. The client isn't either, right? They're not worried about these little small costs for seeing a specialist. But what they should be worried about, and you can say this, Mr. and Mrs. Jones, again, the most important thing we do today is go over how your current health plan works. On your plan, you know there's some small costs and there's some big costs. One of the biggest exposures on your plan is this $295 copay, days 1 through 6 in the hospital per day. Your client doesn't know this, but this is a copay that resets to where, let's say 61 days later, they go back in the hospital, they're subject to another 6-day copay at $295 a day, all the way up until their maximum out of pocket. This can keep resetting every period of care, possibly even 4 times in a year. So they could be paying thousands of dollars out of pocket in hospital bills. Now, is that likely? Not necessarily, but it's important to know that, hey, if you have a bad year, you could pay this not once, but twice, 3, or even 4 times in the same calendar year. So Mr. and Mrs. Jones, first of all, is this something you can afford to pay out of pocket? Secondly, even if you could afford to pay it, is this something you want to be exposed to out of pocket? Is this something you want to pay out of pocket for? No? Well, good thing is, Mr. and Mrs. Jones, you don't have to. Don't let me forget. I'll show you a way we can eliminate this exposure in just a minute. And if you want to add this in there, I'll show you a way we can eliminate this exposure in just a minute. And it's not going to cost you an arm and a leg to do it. It's probably going to be right around $25 to $30 a month. So we get them engaged and interested in this way to protect them from this big cost up here. And then we jump right into the emergency room copay. The reason I like to go straight to the emergency room copay at this point is because built into our base plan is an emergency room benefit that pays your clients $150 4 times a year per trip to the ER. So Mr. and Mrs. Jones, that same program that's going to protect you in the event of a hospitalization is also going to send you a check for $150 4 times a year for ER visits. So what's going to happen is you're going to get a bill for $90, right? You're going to submit that bill to Heartland. Heartland's going to send you a check for $150. You'll end up making $60 on that emergency room visit. At this point, everything's looking good. It's not going to cost a lot for this coverage. So they're either going to ask you for a quote or you're going to take them to the quoting tool before you finish going through the rest of their summary of benefits. On this plan, to cover both of those exposures, it would only cost $25.67 a month. I was just on a training doing this quote in Maryland, $23.99 a month for the same coverage. Just depends on where you're at. It's super affordable. You know, the rates depend on your state, but very affordable. I would say right around $25 a month, no matter where you're at in the country. And Texas is one of our best states as far as rates go. So get in there, play around with that quoting tool. In a minute, I'm about to show you what this looks like in a live demo next to, you know, Sunfire or Connecture, where you're pulling up that summary of benefits and going through it at the same time. So what that looks like is we need to have our Heartland National Agent Portal pulled up on one side of the screen, right? And then our summary of benefits pulled up on the other side. So for Heartland National, to get access to our portal, you have to go to www.hnlic.com. I'm throwing it in the chat box for everybody. This is where you go to write business. Oh, I love all the engagement in the chat box. I'm just seeing this. May I see your hospital card? Yeah, baby. And, you know, just recently I picked up on this. This is a gentleman selling in Chicago in the Hispanic market, and he does a great job of it. He's writing these for about $32 a month, and he calls it the reimbursement plan, right? Looks like the only thing your agent forgot was to help you with the reimbursement plan. So when you go to log into your portal for the first time, we just put the link in the chat box. We use our writing number as our username, okay? So during the contracting process, you would have created a username and password. Once you get approved, forget about that username. You'll use your writing number for your username and then whatever password you created during the contracting process. So you'll log in. We'll also get that summary of benefits ready to go. And then you'll access the Hospital Indemnity e-app right here. If you're on the big screen, full screen, it'll be on the right-hand side. If you're side by side like I am, it'll be right here scroll down past your recent business and commissions, and it'll be right there, Hospital Indemnity e-app. I like to have this up and ready when I walk into my appointments, and then gauge what's a good zip code for you in Texas.
75204.
Good. Dallas, I believe, has some this year. Get your summary benefits pulled up, put it on one side of the screen, and then have the Heartland e-app and quoter on the other side. Of course, you go through the entire summary of benefits just like you normally would, right? It's a requirement anyway, so we're doing it, okay, before we sell any plan. But whether it's the plan you're selling, they're going to for next year, or maybe they're staying on their existing coverage, we always want to make sure they understand what their out-of-pocket costs are. So you're going through everything, you're hitting on their max out-of-pocket. This is important. We'll come back to in a minute. And then the first thing we stop on, of course, I'm not worried about those little $0 copays to see the PCP, 25 for the specialist. Here's what I'm concerned about, and here's what you should be concerned about. This $290 copay per day, days 1 through 5 in the hospital. Okay? Right there, in network. Watch how easy it is to write this. And what did I do? I took an extra maybe 2 or 3 minutes telling them about that exposure and their ability to eliminate it.
You're planting the seed of fear, right? And it's not that you necessarily want to scare them into this sale, but it's just the reality of the situation. And to Brandon's point, it's very affordable. These guys are paying $0 typically. So how I've presented it to people, so we're going to get you your health insurance, we're going to get you your prescription insurance, and we're going to get you your hospital insurance for a whopping $30 a month.
Yeah, I'm not paying $24.55 a month for this hospital plan. I'm paying that, obviously for this complete package that my client set me up with. I've got the dental, I've got the vision, the hearing. That alone is worth $24 a month. But I don't want that without this. I personally wouldn't want that without this. I don't want my clients having to go without this. So the reason I selected 5 days payable was because my copay here is $290 a day per day, days 1 through 5 in the hospital. Now, one thing to point out, and I'm glad you stopped me there, Lauren, the hospital copay can reset. So let's say maybe 61 days later, I'm back in the hospital. I'm subject to another $290 a day, days 1 through 5. Thankfully, this base plan over here with Heartland is resetting every 60 days to where 61 days later, I'm back in the hospital. I get a whole nother set of benefits for another 5 days. So not just one $1,500 bill, but now I'm protected from 2, 3, or 4 $1,500 bills in the same year. So you can fill in the gaps, right? Or I just did this for a lady last year, and she just filed her first claim. You can upsell the base plan, but you have to know how you're going to do it before you go into the house. You don't want to give them 2 options because it just gets too confusing and they'll probably not even buy the insurance. Just because their copay is $290 doesn't mean you can't sell them $600 and get them an extra $310 a day in the hospital. You can sell $600, they'll get a bill for $290, submit the bill, we'll send them a check for $600. I just had this come up. This is how I sold it for a gal up by the airport here in Kansas City. She was in the hospital for 3 days. Her bill was under $900. I got her a check for $1,800. She made almost $1,000 on that hospital stay. And that came in really well for her. That came in handy for her because she had just finished putting her father through skilled nursing and paying all this money out of pocket on his plan. So she saw the value in getting one of these plans. So you can see the premium's a little bit different, but you might try it. Another reason you sell it at a bit higher is because these Medicare Advantage plans over here, These are not standardized like a Medicare supplement plan is, right? Medicare supplement plans, this is how agents would sell MedSup. These plans are standardized, right? Medicare supplement policies. A Plan G is a Plan G. It's the same as a Plan G will be in 10 years. Same as a Plan G will be in 20 years. My Plan G covers me for everything but my Part B deductible, right? For this year, that Part B deductible is $226. The only thing changing on a Plan G is however much that deductible is going to be for that year, right? So that's a standardized plan. Medicare Advantage, these benefits could change year over year, and they do. They do change year over year. Right now, it's for the better. But who's to say that in 3 or 4 years, this copay couldn't be $350 a day for 7 days on this plan? So that's another way, if you need any help upselling that base plan, just something to keep in mind. But as you're just getting started, probably a good idea to just cover it exactly at their copay amount. And look how much cheaper, $12 a month cheaper to do that. So they're protected for this year. But one thing to keep in mind is I cannot just, maybe next year I'm on a plan with a $400 copay. I cannot increase benefits on this plan without going through simplified issue underwriting again. You need a whole new app to increase benefits. But what I can do is if I buy $600 a day for 3 days, I can always bring that down. I can always bring that benefit amount down to $300 down the road if it ever got too expensive for me.
Does that change the premium if you were to bring it down, Brandon?
Yeah, it would. So down the road, maybe they can't afford the $36 a month anymore, and they drop it from $600 to $300. They would pay $18 instead of however much.
Good to know.
36. So we're just going to keep it simple here, filling in the gaps. Lauren, your question sparked some good stuff there, so thank you for the participation. Now, of course, I've covered them in the hospital, and I've covered them for that ER copay. So again, take them to that ER copay on their plan. If you don't use it already, use Control F on your keyboard. Type in emergency room on that summary of benefits. It'll take you right to that copay on the summary of benefits. If you're using an Apple product, you use Command F on your keyboard. Or if you're using an iPad or a phone, you know that little share button in the bottom right where you can share the document? Hit share and then scroll up and you can click find on page on your iPad and you can type in the word chemotherapy. It'll take you right to the chemotherapy because we need to look at all of this. Looking at it creates a visual for the client, and the summary of benefits literally sells this hospital indemnity. The fact that these MA plans have so many gaps is what's fueling, your ability to fill in those gaps. So the next thing I'm going to is exactly that, chemotherapy. So Control F, chemotherapy. I'm pulling it up. Mr. and Mrs. Jones, again, I'm going through your coverage. That way you know what your out-of-pocket costs are. Today, you might not be using this plan, but as we get older, the odds of using these plans become more and more in, unfortunately, the hospital's favor. So you're subject to 20% of the cost for chemotherapy and Part B drugs. You can hit on a couple other things here. You're also paying 20% for kidney dialysis, durable medical equipment, Part B drugs, right? I can't protect you from, the costs related to durable medical equipment or kidney dialysis. But what I can protect you from is this. One of the most common ways people hit their maximum out of pocket on these Medicare Advantage plans, let's get back to it, is due to the diagnosis of cancer. Due to that darn 20% coinsurance for chemotherapy. Your maximum out of pocket is $5,800, meaning the most you could spend in a calendar year is $5,800. As you can imagine, God forbid somebody is diagnosed with cancer late in the year, like this in October, they would hit $5,800 pretty quickly, paying 20% of the cost for chemotherapy, right? Chemo's tens of thousands, hundreds of thousands of dollars. So you could imagine you will hit that maximum out of pocket before the end of the calendar year. Unfortunately, starting treatment this late in the year, don't use them as an example, but unfortunately that individual would still be going through treatment in January, February, March in a lot of cases. Unfortunately, at that point, their maximum out of pocket would reset, right? They would be subject to another $5,800 out of pocket. And unfortunately, again, you will satisfy that within a couple months into the new year, paying 20% of the costs. So most of my clients like to cover themselves for at least 2 years worth of chemo treatment, 2 years worth of cancer treatment. And the way we do that is by adding in a cancer rider here. So if my maximum out of pocket is $5,800, I'm selling $12,000 of cancer insurance. And my premium is still super low when you compare it to a Medigap policy. I mentioned here in Missouri, $165 a month for a Plan G for a woman, a female at 65. This is a third of the cost. Not to mention, I'm putting those Part D prescription drug plan premiums back in their pocket. I'm getting them the dental, the vision, and the hearing. So don't think this is a lot of money. If they're coming off of an employer group health plan, they were paying probably 4 times as much as this on an employer group health plan. If they're deciding between a Medigap and a Med Advantage plan, we're getting them closer to those Medigap policies, and we're getting them the drug coverage, better drug coverage, the dental, the vision, the hearing. So this, I'm not paying, like Gage said, $58 a month for just this. I'm getting a lot more than just this, and I'm paying $58 a month because my agent put me on a program that now works with me because I'm covered from a lot of the bigger costs. He was able to get me the dental, the vision, the hearing, while still protecting me in the event I need skilled nursing, in the event I do get diagnosed with cancer, saving me thousands of dollars down the road. I have a guy out in Oklahoma. Last week, we paid a $6,000 cancer claim for him. The agent told me, Ty goes, he had the conversation with his client. It's going to take his client more than 20 years to pay more into the premiums in this policy than he received from that one payout. 20 years. And that plan is going to keep paying over the next 20 years, I guarantee you, now that that person's got cancer. They're going to be in the hospital. They're going to, need benefits for trips in the ambulance, whatever it might be, trips to the ER. So add the skilled nursing too, especially at 65 when it's affordable to. My average premium is $65 a month on these plans. In Texas, it might be a little higher because of your maximum out of pocket on that PPO there is $5,800. For me, it's $3,600 in Kansas City. So that's why. If I were to drop this to $8,000, it would be right around $64. Yep. So that's my average premium right there because of my max out of pocket's a little lower. You don't have to cover 2 years worth of treatment. You might just cover one, $56. But let your client tell you what's important to them. Is it cancer? Or is it the fear of ending up in skilled nursing like their spouse did, where their spouse paid $200 a day, days 21 through 100 in skilled nursing? You got to listen to your clients so they can sell themselves. So my buddy Moses, his wife ended up in skilled nursing, and look what it costs for skilled nursing. For next year, $203 a day, days 21 through 60. You can imagine that adds up pretty quickly. And yes, you'll hit your maximum out of pocket, but before you did that, you would have spent $5,800. Okay. Skilled nursing is a lot more common than people think. Skilled nursing, it's like recovering from maybe a broken hip or a surgery, like my mother-in-law needed skilled nursing. I just paid some claims on this for somebody who was in there for 30 days. 10 days of skilled nursing, that was over $2,000 of costs. And the rider at 65, look at this. How much does it cost you? About $15 a month when you add in our 7% discount. So skilled nursing, ask them if they know anything about skilled nursing. They might even tell you up front. I've had clients who worked in skilled nursing facilities and know what a nightmare it is to deal with Medicare and private insurance companies when it comes to skilled nursing and getting benefits paid. Yes, it's huge. And this benefit here, paying $200 a day, days 21 through 100 in skilled nursing, resets just like the hospital coverage every 60 days. It's a Part A covered service. So 61 days later, they get a whole new set of benefits after being out of skilled nursing for a period of 60 days. Okay, I don't want to get too crazy with these riders. Again, maybe it's your first time ever selling these plans. Test out the waters. You know, here's a little base plan with 1 year of cancer coverage and maybe an ambulance rider. We're under $50 a month. Boom, sell that every time. This AEP. Selling 2 of these plans a week at this premium right here, you'll make an extra 20 grand a year. Just adding this to your MA sales. 2 a week, that's all. So I'm going to finish demoing the EAP just to show you, to discuss some things when it comes to underwriting and pre-existing conditions. We'll talk a little bit about the billing page, and then we're going to go back to my PowerPoint after we get this signed. And I just want to hit on a couple more riders and a couple more details on the cancer rider. So I put in a 65-year-old. I'm not having to answer health questions because they're in my GI window between 64.5 and 65.5. So typically your clients would have to answer these questions. In the last 2 years, have you seen a physician, been diagnosed, treated, or taken medication for any of the following? Internal cancers, leukemias, Hodgkin's disease, or lymphoma. Parkinson's, MLS, ALS, Alzheimer's, dementia, or drug or alcohol abuse. Congestive heart failure, stroke, heart attack, heart disease, cardiomyopathy, PVD, or aneurysms. And then when it comes to chronic kidney disease, just know we're more concerned with stages 4 and 5 kidney disease. So when you're out there, this AEP, and you run into somebody who has stage 2, stage 3 kidney disease, it's okay. We'll take them. Just so you know, when it comes to filing claims, we're paying them out all day long if it's not, you know, end stage kidney disease or kidney failure, stages 4 and 5. When it comes to diabetes, we're one of the only companies taking an insulin-dependent diabetic up to 50 units a day for diabetics, as long as they don't have any complications like neuropathy or retinopathy. And then down below, AIDS or HIV, COPD, emphysema. And then right here, we have to refile in every state to take this off, so that's why we haven't. But we do take CPAPs for sleep apnea, okay? Just if you have a client using a CPAP for sleep apnea, just go ahead and answer this question, no. Unless they have emphysema or COPD, obviously. Or if they use a nebulizer or oxygen, these are knockouts here. Osteoporosis with related fractures or any other connective tissue disorder. In the last 12 months, have you been confined to a nursing facility, bed, or wheelchair, or received home health care? Have you been hospitalized 2 or more times in the last 12 months, or been advised to have surgery that's not yet complete? And then used a walker, TENS unit, or quad cane? Do you have a pacemaker or defibrillator? So a bit of underwriting when it comes to applying outside of the GI window. But that's how we're able to keep those rates locked in at issue age. So when they buy it at 64, we can keep charging them the 64-year-old rate. So right here, in the last 5 years, you do have to answer these questions. Even if you're guaranteed to issue, you have to answer these 2 questions to get the cancer rider. So looking about 5 years for cancer instead of 2. And then in the last 2 years, have you experienced any symptoms that would have caused a person to seek medical advice from a practitioner or to have scheduled any diagnostic tests for any of the conditions listed up top, questions 1A through H. Again, this would only disqualify you from the cancer rider. So if you answer yes here, right, and continue, the cancer rider is going to be dropped off the plan. You're going to see the premiums a lot less. But if you can answer no, you can get the cancer rider. So only other things to note when it comes to underwriting before we finish the EAP. It's going to take me probably 3 minutes to write this app. Watch how easy it is. But when it comes to underwriting, we have a 6-month pre-ex. We don't pay for pre-existing conditions for the first 6 months. And then we have a 1-year contestability period. So if your client files a claim in the first year, we'll look back at medical records to make sure they were truthful on the application. The reason we have to do this is because there's no underwriting done on our end at 65. or I mean, there's no underwriting done on our end at the time of issue. Excuse me. So when you write this policy, it gets issued 100%. As long as you've answered no to all the health questions, it's going through. There's no, did it get approved or not? If you get it signed, it's approved. And it'll be in your portal within about 6 hours showing as active or issued pending processing. But it'll never say pending issue because it's always getting issued. Just whatever amount of time it takes to get, the policy in our portal. So the e-app is super easy. Got a buddy in Mississippi, writes these in 3 minutes, he tells me, because it's become a habit for him. So if you put in an email here, you'll be given the option to sign via email if it's a phone sale. If you put in a cell phone, you can have it signed via text. If you do not applicable and you only put a landline in, the only way to get it signed will be in person. So a cell phone for via text, email for via email. If you do not applicable, obviously we won't be able to email that out. So when it comes to the household discount, all you have to do is live with somebody over the age of 18 for the last 12 months, and you'll get a 7% discount in most states. Okay. So if you want to take off riders now, you can, or if you want to add more to the policy, this is your last chance on step 5, benefit selection. So you can make some alterations here. Alterations. And then we'll select our effective date up to 90 days out. So what's neat about that is, remember, these policies pay on issue. So if you write this policy for a January 1 effective date to coincide with your Medicare Advantage plan, you're going to get your commission in October or November. So it's important to make sure these are getting funded in January. Stay on top of that. In our portal, we'll notify you if one of your clients misses a payment. You'll also get an email if one of your clients misses a payment. It'll tell you why: insufficient funds, bad bank info, whatever the case may be. So I've requested an effective date of 1/1, January 1st, 24, to start with their new MA plan. Now I have the option to either draft immediately, which would mean their first premium is going to come out this week on issue. Fantastic. If not, you can draft it out to the effective date, January 1st, for example. So I write it today, coverage starts January, first draft comes out January. Now, on the recurring draft date, keep that within 10 days of the effective date. So if my effective date is on the 1st, I want to keep that between the 1st and the 10th. So what would happen here is, if I went with the 1st, my first premium would come out 1/1, my second premium would come out February 1. Same thing if I went on the 10th for my recurring draft, initial premium 1/1, recurring when? January 10th, or I'm sorry, February 10th. Okay. But as soon as I go outside of 10 days, let's say we went with the 15th here, my initial premium would draft January 1st, and then I would actually have to draft their second premium on January 15th, a month ahead of their coverage, of their February coverage. So keep that within 10 days of the effective date here. We'd be able to take that next premium on February 10th. If let's say they don't want to do that, they want the 15th, just go ahead and they don't want to pay a month ahead for February. Change the effective date to the 5th. Their coverage won't start till the 5th, but then their recurring draft would come out on the 15th of each month. The only methods for payment are either a checking or savings account, or if they need to, we can do a quarterly, semi-annual, or direct bill via a paper application. They'd have to send in their first payment with the paper app. So they do have to have a routing and an account number. Now, any debit card they might have is associated to, a bank account, right? It has a routing and an account number associated to it in most cases, that debit card. So a couple things to acknowledge here. Where do you want the policies going? Do you want to have it sent to the producer so you can hand deliver it on January 1 when you go back to write the life insurance? Or do you want to send it to the applicant? On that signed city, that's going to be wherever the client resides. If it's a phone sale, you're in Texas, the client's in Alabama, you're writing it in Alabama. When you get to the signature, oh, actually one more step here. So did you sign it in person or did you do it over the phone? If there was anybody else there present when you took the application, put their info in. And then did the applicant review the app for correctness and omissions? Are you related to the applicant? If you're related, you'll be paid as earned instead of on issue, an advance on issue. You get paid monthly as the payments come in. Split commissions. And then the HIPAA form. So that's it, everybody. Acknowledge the HIPAA and then go to sign. Sign in person for today, just so I can show you what that looks like. Or you can text and email, or just email. And then put your email address in here, the agent's email. This is kind of like when you're writing with AARP, it asks you if you want a copy of the enrollment receipt. This is going to give you a copy of the signed app. When it gets signed, it'll send you a signed copy, letting you know that all parties have signed. Which is especially important when you're helping a husband and wife. Maybe the husband signed, but the wife hasn't yet, or vice versa. You want to make sure both parties have signed. They'll get 2 separate emails or 2 separate texts to sign. So the first step is agreeing to electronic records and signatures up top. Check the white box, hit continue. This is the client, okay? Now, if you're there in person, just turn the tablet over or the laptop and they can sign on your screen. Hit sign and hit adopt and sign. Okay, they'll see all this up top. They can change it to draw if they want to, but just leave it as select style and adopt and sign. Hit sign on the HIPAA and hit finish. Once you hit finish, you get a copy of the signed app in your inbox. You'll be able to track recent business under your recent business tab in the portal. Okay, if you scroll down over here, proud of this because we just changed it. You can actually sort by sign date. So if you want to look at most recent business, you can come in here and track that. You'll have a commissions tab showing you what each policy is paid. And then even over here on the left-hand side, commissions view. Just so you know, we have a supplies tab available. This is where you can download a copy of the paper app. So if we're in Texas, use the drop down to select your state. Remember, if you're writing the app, it has to be on the appropriate state's form. If you accidentally write somebody in Texas in an Alabama app because you selected Alabama on the first step, you're going to have to resubmit it in the appropriate state because all the forms are different. Each state has little minute differences. We have a nice little brochure here you can order from your portal. We'll send you some hard copies. Gage, I think we talked last week. I'll be sending you some today.
Yeah, I would love some.
And then the app packet. This is where you'll see health questions on page 2. Any questions on this product? I know there's probably a bunch in the chat. Here's the health questions. If you ever want to just maybe print one of these out, a copy of page 2, keep it in your bag, your briefcase, whatever you use, and take it with you to your appointments. You don't ever want to offer somebody this coverage before finding out if they qualify. That's the worst. I learned the hard way the first couple of times I was selling these things, and you hate offering something like that and saying, oh, wait, sorry, you can't get this. But what that does do is it actually makes the spouse want it more. So maybe the spouse is healthy enough to get it. You know, wife has kidney failure, husband doesn't. They really want it now. Had that happen too. So that's it, everybody, on the hospital indemnity. I hope you all have a great AEP, and please feel free to text or call me. I don't have a lot of time left here, just 4 minutes, it looks like.
So there was a question in here that says, is there only one more person allowed for the household discount?
The household discount. No, so they can live with, I think it's like up to 3 people in the household to get the discount. What's the question? I'm sorry.
It says, is there only one more person allowed for the household discount?
Oh, I see. So you can write one person by themselves, and as long as they live with somebody over 18, they get the discount. You could write 2 people on the same app, they both get the discount. And then you could go write the other family member on a second application. Just because you can't put more than 2 people on the same form doesn't mean you can't go write that third person and get them the discount as well. So you can use that same household relative for multiple people to get the discount. And feel free to come off mute if you'd like to. I actually forgot one thing I wanted to cover here.
Does anyone have any questions for Brandon?
I forgot to cover this. With our cancer rider, it's built in. You get an additional payout on this cancer rider. It's called a recurrence benefit, to where after you've already been paid, let's say your $10,000 lump sum cancer benefit, your benefit restores back up to 100% after 5 years cancer free. So let's say you've now been cancer free for 2 years, you'll get a $2,500 check instead of 10,000. But you're diagnosed with cancer 2 years later after being in remission for 2 years. There's your payout. After a full 5 years, you'll get another check for $10,000 on the diagnosis of cancer. Most companies would charge an additional premium for this to add that to the cancer benefit. Ours is built in. Another thing to note is most companies on these cancer plans take 10 years to restore back up to another 100% benefit. Ours only takes 5 years to restore. So I thought that was pretty important to touch on. I've got an entire PowerPoint here going over these riders. You know, how many times a year does the ambulance benefit pay? 3 times a year at $200 a trip, covering air, ground, and water. What benefits are included on the wellness rider? Well, those would be all listed over here in my PowerPoint. So I'll share this with you so you have it, Gage, and you can share it with the whole team.
That'd be great.
And when it comes to the dental vision hearing rider, I don't see anybody selling a ton of that because the dental benefits are so good in these Medicare Advantage plans. But if you have questions about it, call me. The neat thing about it is there's no network, just like any of our other benefits. You can go to any dentist, and we pay off actual charges. So right here, you can see we pay off of actual charges. So the benefits aren't huge. I mean, it's $1,000 or $1,500 a year total. You can't exceed that. That's the max payout. But when we are paying, we're paying at a pretty, substantial amount. We pay on basic services after 6 months, including $200 a year for eyeglasses and hearing aids, and then also major services after 12 months. We do not include implants. And that's according to this schedule. During the first year, we'll pay 60%, year 2, 70%, year 3, 80%, and beyond. There's our state availability, 36 states. And then as far as filing claims go, we just need a copy of the itemized bill, the itemized statement of service. The hospital can fax that in directly to us. I always tell my clients to go ahead and call me if something serious happens. I don't mind taking 2 minutes to call the hospital with them, press option 2 for billing, for example, and just ask for a copy of that bill to be faxed over. If it's going to take a lot longer than 2 or 3 minutes, just go ahead and tell, especially this time of year, tell them to call that number and wait on hold and get that done. But for me, it's not a big deal, especially if it's just a couple minutes on hold. So they can either email or fax that in. And when it comes to a cancer diagnosis, all we need is a copy of the pathology report. That's it. We don't need anything signed by doctors, just just the cancer diagnosis, showing they've been diagnosed with cancer. Okay, there's my cell, my email. If you need me this fall, even if it's in the home, call me. I'll be there to help you. I just helped a gal in North Carolina add like a skilled nursing rider and a cancer rider to this plan. They brought the premium up from $35 to $74 a month. Client loved it and makes a big difference in the agent's pocket too.
Really appreciate your time here, Brandon. That was super informative. And you gave us some great word tracks to utilize. I'm really glad we got this recorded so we can continue to watch this over and over. If you guys got some value out of today, or you're excited to start trying to pitch Hospital Indemnity, drop a BR in the chat for our man Brandon Reed for taking time out of his day today. We really appreciate you. And definitely, if we could get over the slide deck, that would be great.
Awesome. Yeah, I'll kick over the record, or you've got the recording. I'll kick over the slide deck and a couple other helpful tools, and let me know if you need anything.
Awesome, man.
Yes,
Really
thank you, Brandon.
Welcome, Ashley.
Yeah, we appreciate you. Thank you.
You're
Thank
welcome.
you.
Bye, everyone. Thank you for coming on.
Thanks.
Good luck this fall.
Bye.